Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to take over the screen here in 1 second. I was actually just chit-chatting with David Keller, who just did the finished up the webinar. He had just mentioned, he just said hi to me, so I was just chatting with him on the side there. So let me go ahead and grab the screen, and we can go ahead and get started. I hope you guys enjoyed his interview. He's great. He's always a great technician to listen to. Hope you enjoyed his interview. Gorkum, good morning. How are you? Okay, let me make sure everybody knows I'm starting Morning Edge. Starting now. And sorry, like I said, I got caught up chit-chatting with David Keller. So, hey guys, I'm long a little bit of dollar Mexican peso down here. Okay. So just a little heads up. Okay. I bought a little dollar Mexican peso. Let me share with you the reason why really quick. So let's, okay. So Steve was he was pretty bearish, looking for 1955. I think that was obviously the right call. We came really close. We got to like 1958 or 7 or really damn close yesterday. But notice how we closed back above the lows. You guys see that? So that's a false breakdown, right? So I was looking at that saying, okay, well, we respected the lows. Little false breakdown there. This very much feels like an accumulation, and I'm like, wait a second. Aren't we dealing with a very similar type of situation here? Isn't this right here a Wyckoff setup? You know, where we have the lows, bounce, you know, consolidation, break to brief new lows, move higher, and possible reversal. I'm like, yeah, that might be. So I took a small position and a close day above 1977. I'm going to add some more. So just so you guys know, I'm playing this to the long side because I do think that we had a false breakdown. I need a few things to happen though, right? I need stocks to actually roll over, which, you know, it's like, when's that happen? Never. So let's go ahead and let's get the bias chart. Gorkum said, I went long the US dollar South African rand. You ran right into channel resistance here. So I would say you have to get a move above 1380 to really, you know, to get that to squeeze. But I mean, look, it's very similar to dollar Mexican peso, you know, just divergent. Well, actually, that wasn't divergent. That was actually confirmed. But the longer term, I guess, has been divergent. But still, you really need to take about that resistance, right? Anyway, since I'm talking about the dollar Mexican peso, we got to mark up yesterday's lows as 1950. Well, let's just call it 1960. Okay. 1960. And then resistance would be right there. Previous support. And matter of fact, that's I betcha. It's a 38% retracement. It is 1983. So it's right there. So I'm going to actually mark that up. That's going to be resistance today. We get above that, we might actually squeeze. I am going to keep it in. man, it's really hard to put it in bearish as we're holding these lows. You know, as we held that 1955 level, it's difficult. And I still have it in range from yesterday too. All right, forget it. We're going to keep it in range. Let's go over to the euro. So ECB, you know, the euro's exactly where it was at pre-ECB. So support 121.40, resistance 122.20. Oops. That's it. Let the triangle break. Cable. You probably got the update because I was looking at it like this the last, you know, few weeks. I was looking at it like this, right? That's what the, like, if you go over to here, go to ForexAnalytix, go to the daily chart. You can see that's the way I've been looking at it. Just like a, you know, just kind of a flat support, right? Obviously we probed below there a little bit, but today you can see I dropped that trend line down on the 4-hour because see that? That's where we have an intersection of not only the trend line, but we have the channel support there too. So that shows us how important today's lows are. So today's lows, 140.73. I'm writing that number down. 140.73, and I'm going to put an asterisk. And we have to stay above that. We drop below that. We drop below that, things are going to turn bearish. Okay. Resistance 140. Well, we'll write what we wrote down yesterday. 142, 142.50, 42. And I told everybody in the chat room, and you guys probably saw my tweet yesterday, or you might have. My tweet was just you gotta be really careful with the sterling. I mean, you know, if the dollar actually bounces, this sterling is going to get crushed. And you know, this is obviously channel support. This is a big double top. I mean, we could really trade from 140. Well, let's just call it 141 down to 137, 138. You know, that really could happen. So, you know, it's possible. Anyway, I think we just need to pay really, really close attention to the sterling. You know, somebody that is our normal listener on the webinar, who obviously isn't part of the ForexAnalytix community like you guys are, and he was like, well, you know, you don't look at the sterling much or the pound much. And I'm like, you know, it's on my radar right now. And when it's moving, it's moving. But when it's off my radar, I don't fiddle faddle around with it. Get whipped around a lot in it. You know, that's just, I know I'm not the best sterling trader out there. So Aussie dollar, right up against resistance here, 77.50 support. And remember, we've struggled at this trend line all week. So I'm going to write down 77.60 this morning, because yesterday we wrote down 77.70, right? No, he wrote 78.20. But remember, I think if I remember our mistake, because we were right up here, I said, okay, watch the resistance here at 77.70. That's why I said, watch the resistance here right there, but I'm not going to write it down because we're so close. I'm actually writing it down today since we rejected it yesterday, the same trend line. 78.20 is obviously resistance. I'm sure 76.80 or 77 cents doesn't really matter. It's all just down here. Kiwi. You can really say that the Kiwi is struggling the same way the Aussie is. I mean, you know, obviously 72.40, 71.25. Oops, shoot. $72.45. Okay. Dollar Canadian. 121.50. $120. And if that breaks, then we get a squeeze. But remember, it's bearish until proven otherwise. Okay. Dollar Swiss. Notice where we bounced yesterday. I mean, how good was that? Again, 89.30. Just, I know we've been writing down 89.30 a lot over the last couple of weeks, but it never ceases to amaze me how well that's being respected. 90.80, 90.70. Where's the 200-day moving average right now? It is currently at 90.70. Forget about it. It is at 90.70. I'll leave it at 90.70. Dollar Norway. Man, we are holding 820. I know I wrote down 824 like 100 times last week. We went as low as the other day 823.60. So you know what? This is bearish while we're below the 200-day moving average. Dollar yen. Oh, I'm sorry. Yeah, we did dollar max. Dollar yen. Look at how well this trend line, this channel held, right? I know we were writing down 109, 109.10 or 109 because of channel support. Really, it's holding. We're getting close to 110. I'm going to write down 110 and a quarter or 110.23. I guess 110.20 and then 109.10. And it's a range. This is really important support because if we break that, then I'm going to tell you right now, if we break this support here, I may actually, because I'm already short euro yen, I'm short sterling yen. Watch the euros dipping here. What did the ECB say? Hold on. ECB say something? I mean, I guess a few minutes ago, giving the go ahead for digital euro exploration phase. But that shouldn't have moved market. Maybe there's something else that you guys saw. But anyway, the euros.
I don't see anything, Blake.
I didn't ask you.
Okay, fine. Whatever.
Thank you. It's I wonder if people are just, kind of, hey, I'm not, I'm holding euros and it's not paying me. Maybe they're just getting out. But we are in the this is a triangle, right? And this is a consolidation. So when you're in the apex of this triangle right here, like the apex of this, this is where it gets really whippy, right? The tighter it winds up, the whippier it gets. And a lot of times things happen for no rhyme or reason whatsoever. And that tends to happen during, these consolidations. Obviously today there's comments maybe, from the ECB or Lagarde that might have affected the market, but I don't know. But thanks, Del, for looking. All right, let me continue on. Hopefully Steve's done eating by now. We'll find out. Steve, all I have to say is this is now your shtick. It's your thing.
Eats while he talks. That's what we're going to
It's eating while he talks is his thing. Like everybody's going to know Steve. Like, oh, that dude that eats while he talks. Like they look at me and they go, oh, that's the guy that's he sings about the Greek gods, or he does the Smurf song. Steve's thing is he eats while he talks. That's his shtick.
Yeah.
It's your shtick, Steve. Everybody's gonna be like, hey, here's Steve. Didn't understand one thing he said. All right. Dollar index, channel support. I know we're really concerned with the 89.60 support, but I think we have to be more concerned right now with just the channel support. That means these lows are pretty important. I'm going to write down 89.90 now. Well, we can write down 89.60, 89.90, and obviously resistance is 90.60. That's key. I got asked in the chat room earlier today from, who was it that asked me? It was so early. I was like half asleep. Somebody asked me, Jahan, he asked me, he's like, hey, Blake, how do you feel about the dollar, ahead of the ECB? I'm like, man, my thoughts were, because he thought he was like, just what are your thoughts ahead of the dollar ahead of the ECB? I'm like, well, we're so close to the support. It's really hard for me to be bearish right here. Obviously we start clearing some of this channel support and we start just, get daily closes below 89.50. I'll be like, okay, the dollar really looks like it's going to crap the bed. But right now, we're holding this channel support. So I think we got to be respectful of that. We're holding all this major support down here. We had a little bit of a false breakdown. Does that mean that the dollar index is heading back to 93? I don't know. It's possible. This to me, if this actually looks like a wedge, right? So support, right? And eventually breakdown. That's what it looks like to me at the moment. And I'm sure we could argue that point that the dollar is eventually going to get absolutely crushed. So, but is it going to be today? No, the dollar index maybe, makes it back to 92. We'll have to reevaluate if it makes it back to 92, 92.20 and say, okay, well, why is the dollar up there? And is there scope for it to move up anymore? And then that question will be posed based on what is happening at that moment. S&P. So same stuff every day, right? Nothing's changed here. At some point we're going to make a move for 3,000. All right, 3,000, 4,300. I'm sorry. 4150 is support, right? And it's bullish. So, 4,300 is 127% extension. Support 91. Well, now it's 91 or 91. Geez, I'm tired. 4160 is support. Gold, silver, what are they doing? I haven't really looked this morning. I mean, it looked kind of whippy earlier. So, and you know what I was really surprised about? I was surprised Bitcoin squeezed. Should talk about that. It actually squeezed. Now it squeezed up to, I thought we might be developing a wedge, and it looks like we are now. So very similar to the dollar index in a sense. I mean, the dollar index is a much bigger chart. But this Bitcoin looks like might be more of a wedge developing. Yeah. Anyway, resistance is today's highs, which is 38.5. Let's just call it 38.5. So 30. Oh, shoot. 38,500. Then 41,000 because that's the, or it's actually 42,000. That's the 200-day moving average. And obviously support is still at 30,000. That's it. Down here. But it does look like it's just kind of wedging. Silver 28, 20, 27, same as yesterday, same analysis, different day. We're going to keep that one in range. Gold is going to be bullish while we're above 1845. 1920 is the 618, so nothing's changed there. 1845. As long as that holds, we have to remain bullish. Gold, 1920, significant resistance, 618 retracement, bias chart's done. All right, Steve, are you done eating?
One webinar ago.
I'm telling you, man, that's your shtick. Your shtick is the food, eating while talking. Which,
you know,
your mom
somehow have to sustain my fat.
Yeah, no, but that's
not an easy job, bro.
Maybe it's an American thing. In you know, as Americans, we were always taught never talk while chewing food. That's like rule number one.
You don't know what you're missing.
You don't know. My wife has literally slapped me in the face as
really?
I was chewing food, trying to talk
I need to
one
see
time.
that.
She's like, that is so gross. And she like, you know, but she didn't like hit me. She just like literally like slapped me in the mouth, kind of like.
Yeah, you know. Now you're trying to to reduce the significance.
No, it was kind of like
bitten by the wife,
like a mild slap in the face, like you know, when I'm sitting next to her and we were having a conversation with another couple, and this is before we had kids. So, you know, it's, you know, when you're, newly engaged or whatever. And I remember I was like, we're having some, drinks, we're having some wine, we're talking to friends, and I was eating whatever I was eating, steak or a burger or something. And all of a sudden, I was trying to tell a story, and she like slapped me in the face because I was talking with my mouth full. But it's funny because that's something that we as Americans were like, yeah, we don't talk.
Our friend here is saying this is a universal thing. Maybe it's just Greek sweet and talk. Don't put me in the same situation as Steve. Okay, I know Steve.
There you go.
I'm like, there you go. All right, maybe it's how you guys do. But here's the thing. I remember vividly my first visit to Greece in 2003 when I got married there 18 years ago. And we were in Milos, and we were having, the wedding was there, and so the whole family, Lisa's family, could come. And so there's like the house that they had. We had like 25 people at the table, doors and windows open, and it's September, the breeze was coming through. We were just everybody's talking really loud. There's music playing, it's in the background. Music's really loud. Everybody's like borderline yelling at each other.
Of course.
debating,
about?
talking,
Of course.
drinking. It was fun. I mean, but no one cared about like, oh, don't talk with your mouth full. Anyway, I'm sorry. We're really on a tangent. I'm going to let you guys take over. Guys, good luck today. Remember, we are in a triangle in the euro, and I'm hoping for a breakout soon. But anyway.
Thank you, Blake.
See you
Still
guys.
take over for
Yes.
1 minute.
Sure.
I'm here anyhow.
You want me to
Just give me
take
1
the
minute.
screen?
Yeah.
Hold
Go
on.
ahead, please.
Let me switch to light mode because I have it in dark and people complain.
You
Okay.
see,
Share screen.
there's always a reason for somebody to complain.
Yes. Share. So, so the ECB are not, we had the press. It's still ongoing, I think. Is it? But anyway, nothing new. They gave us some more projections on GDP and inflation, and lo and behold, they're increasing their estimate for this year's inflation. I can't remember the exact numbers, but they're increasing it by like 0.5%. But the next 2 years, the prediction is exactly the same as before. So they are going with the whole transitory routine.
Amazing surprise.
And GDP as well. They're actually increasing this year's GDP estimate. I'm going to get the numbers and I'm going to give them to you, but by a little bit. So overall, it looks like the ECB is singing from the same sheet as the Fed, and I doubt that they're going to, rush to do anything in terms of tightening.
To be honest, Stelio, I'm very bullish GDP expectations globally during this period. And the reason is, I think at least the two of us agree that CPI is rigged. Now, we can debate on what extent, but it's rigged.
Yeah.
Now that we actually have a lot more inflation than we used to have, the effect of toying around with inflation is even greater because it's analogical, right?
Yeah.
But that means that the GDP deflator is even more toyed with than it usually is, which means that GDP should be inflated more than it usually does from CPI.
Yes, actually, that's a good point. Yeah. Anyway, let's see. But I personally don't think the major central banks are going to rush ahead and do something, even though we're seeing inflation going quite a bit higher quite quickly. Now, what did we say on FA.C.E? We said that unless these numbers, the way the central banks are acting. Excuse me. It doesn't make me want to deviate from what I've been saying for the past weeks. So basically, nothing's changed for me. Unfortunately, I think we keep grinding higher in equities. And look, this is what we're seeing: the S&P, the Dow are up 0.5%, and the DAX as well is up. So it's just this grind that continues. Because let's face it, we still have very accommodative monetary policy, and no matter what they might hint about trying to think about tapering and all that, they're not doing anything yet, and they're not going to, at least not in the immediate future, I don't think.
Also, another point to make, Stelio, the more inflation increases without changing anything, the more accommodative, in effect, monetary policy becomes.
Of course. By definition, yeah.
Yeah.
So exactly. So you're getting real rates becoming very negative, and they should be doing something, but they're not. But anyway, it is what it is. They have their methods and their their way of dealing with it, and let's see what it brings. But otherwise, it's been, it's the euro has done nothing. It's gone up 20 pips, down 20 pips, nothing really. The dollar is near support. You can see DXY is big support around 89.25 or something like that. So we're close to that. I think it will get tested. The question is what happens there. Metals actually, I don't know if you noticed, as soon as the inflation number came up, metals got smacked. Gold was down 1%.
I actually tweeted about it. This is the Pavlovian reaction
yes,
of a market that keeps insisting, for some reason, in reacting the exact opposite way, because there is this perverse idea that instead of the market participants thinking straightforward, which is what? Increasing inflation means faster erosion of purchasing power, means you want to be away from the currency that has that inflation. But for some reason, market participants seem to be stuck back in the 80s when we actually had monetary authorities that were willing to do something about inflation. So the concept is, oh, higher inflation means that they're going to hike rates. Hiking rates means that the currency is going to go up. And they don't realize that even when the time comes that they are going to hike rates, because inevitably at some point they will,
Yes.
right?
Yes. Yes.
They're
Yes.
going to be so far behind the curve that it's not really going to matter.
Yeah. Yeah, I agree. And they're going to be so far behind the curve, they're going to be hiking 50s.
Yeah, but
have
to be
to.
honest, Telio, there seems to be now a segment of market participants that realize the fallacy, because as you see, we get the initial reaction to sell precious metals, and almost immediately we got the market reversing that move, and I think that's the right way to go.
Yeah. Yeah. Yes. So I don't have anything else to say. So I'm just watching the markets grind higher, and I remain with my positions. So I'm still long silver, gold, miners, and a couple of other ETFs which are
And I
uranium.
think today's data is pointing once again that you probably have more or less the proper portfolio.
Well, yeah, and I'm lucky that when I put it on, it just went straight up. So I have, I don't have a psychological pressure on it, but I'm sticking with it.
Although you've gotten used to, I mean, you're a longer term trader. It's not like you
Yeah.
you look at your P&L on
No,
every minute.
no.
It's always
Anyway,
good to find yourself in the money immediately, of course. There's no question about it.
yeah, that's lucky when it happens. Okay, let's have a look
Okay,
at. I
nice.
don't know. I'm going to stop sharing, and we can
Yeah,
have a
let
look
me
at.
grab the screen.
Yeah.
Absolutely. So let me take the screen. There it is. Okay, so S&P actually did hit all-time high territory just a few moments ago. I mean, just slightly, I mean, 0 point something above the previous high. You know, the move higher still not really inspiring, I have to say. Nasdaq is not yet at the all-time highs, of course, not far away. But as I said the other day, you know, the IWM broke to new highs. Broke this triangle, not new highs first, which could have been a very nice signal that the rest would follow to the upside. So among other things, stocks do benefit from inflation. Let me be clear. Not all stocks benefit from inflation. Theoretically speaking, stocks that benefit from inflation are stocks of companies that actually have create an income stream, for example, give dividends. They have real assets that back their balance sheets. So, theoretically speaking, in a proper market, what inflation would do would benefit stocks of companies that actually offer value. So, theoretically speaking, if we see inflation continuing to spike higher, we should see a rotation from all the so-called growth stocks, because the vast majority of them, not all of them, but the vast majority of them have like no real income, they pay no dividends, so on and so forth, to other stocks of companies like the ones I described before. So in general, inflation, unless it completely goes out of hand and out of control, should keep stock markets well bid. Now, here are the precious metals we talked about before. Just look at the spike lower that we had. I mean, we moved, what was it, like almost $20 lower, and we're now positive on the day. And guess what? We should be positive on the day purely based on the data, right? Now, the more price action we see in gold and silver, the more it looks like to me that we are crafting some type of a bullish consolidation. Might be this channel in the case of silver, might be a symmetrical triangle in the case of gold. Something like this, right? And eventually, sooner rather than later, you should expect a continuation to the upside. So yeah, not much more I have to say about precious metals. I still think that it's a matter of time before we see an extension higher. Gold has already broken the long-term corrective formation. Silver hasn't, but I don't think it's going to take a long time for it to follow, right? Platinum remains weaker than the rest of them on a relative basis, but I still believe that platinum is also going to do great. Palladium in some type of a corrective mode, type of a corrective formation, in corrective mode. Copper the same. In both cases, I think that these markets remain extremely strong, and they should break out as well. Crude oil, another positive day as it seems today. As I said, I think 72.5 is easily doable, and I said that since we broke out from there. Perhaps even higher, even closer to $75, right? Before we can see some type of a deeper corrective move. So, for the time being, keep looking higher. I don't see any indication you should do anything different. Now, dollar hasn't made up its mind of what it wants to do today. It was higher, it was lower. It's now more or less unchanged on the day. Euro USD, same thing. Cable is actually doing better. Keep in mind, though, if we're talking about, relatively trading, euro with the pound, don't forget that we're still trapped in a symmetrical triangle in what looks like a consolidation. We're running out of space, so I'm assuming that sooner rather than later, we need to see in which direction the next move is going to be. RSI is also like completely flat, roughly at 50. So, euro pound in hibernation for the time being, but I don't think that's going to last for much longer. There is some room to the downside before we actually break down from like a key level at 85.80. Until that happens, don't forget that we also, besides being in a short-term consolidation, that's within the context of a longer-term consolidation, right? So, we need to see what's going to happen there eventually. Now, the cable itself, just look at this. I mean, it literally has done nothing in 3 trading weeks or so. Of course, being in an uptrend as it has been for quite some time, consolidating in time should be interpreted most likely as a bullish type of event than a bearish one, right? So the more we consolidate in time and we don't break lower in price, the higher the possibility that we're just going to resume higher. And now we even have space within the channel, right? At some point we hit the channel's trendline resistance, but now so many days have passed that we're actually closer to the trend line support than to resistance, which means that even within this channel, we can move from where we are to 144 and still not having gone in essence parabolic, right? So keep that in mind. There is space for more upside without even disrupting this recent formation. Let me see what else. Yields, yeah. So yields have had like 3-4 consecutive down days, but my thesis hasn't really changed, right? Especially with the data we get. I find it extremely hard to believe that yields can substantially move lower from here. I think, all this is still part of a consolidation of the recent gains we had. And sooner rather than later, we're going to see a break higher and an expansion towards, I guess, 2% would be a nice, psychological level as well for the market. So I really wouldn't be looking for aggressive downside targets from where we are. Probably quite the opposite. The commodity currency complex, like the Aussie, the Kiwi, etc., although they remain, well bid, they still remain in larger consolidations. Probably we are trading within a bigger symmetrical triangle here in the Aussie, and as you see, we are just above the middle of it. And in the case of Kiwi, we might also have a triangle. I haven't drawn it here, or we might have a more complex correction, one move lower, another move higher, perhaps a little bit lower before higher, something like that. But in any case, longer term, I don't think you should be looking for bearish targets. I think you should probably, it's a much better idea if you start looking for bullish targets and hope to find better levels to buy. Um, I don't know if that's going to happen, but if it does, I think it's going to be a buying opportunity at least. I think that's it more or less. So let me go through your questions. Let's see. Euro pound long. Oh, I just saw your question. You already know the answer. I mean, I covered Euro pound without seeing that you asked. So I think you need to remain patient in Euro pound. It seems to be stuck. Let's see in which direction we break this triangle, and then you can buy or sell the breakout or the breakdown. SPY new high, Mazel tov. Yeah, actually yes. Incremental new high, but to be honest, yeah, why wouldn't we extend? I mean, it's very likely we will. SILJ and GDX, absolutely. So GDX, here's GDX. Really surprisingly hasn't broken out yet, but just give it a little bit of time. This is some type of a bullish consolidation. Expect this to get resolved to the upside. GDXJ, let's look all four of them. GDXJ, more or less the same thing, a little bit of a different consolidation pattern. Might be this one, not necessarily, because we might see price action unfold a little bit differently, but in any case, I do think we're consolidating before higher. SIL, as you see, SIL, exactly as silver itself, hasn't yet broken out from its bullish consolidation, right? I think it's a matter of time though. And SILJ, there it is, same deal. Actually, this looks even more like silver itself because it's symmetrical triangle. So I think these ones are going to be breaking sooner rather than later. The others have already broken. They seem to be consolidating, more or less mirroring what gold and silver have done. Right? No big surprise there. Let me see what else. Silver, platinum, palladium, covered those. LNG. Let's have a look at LNG. LNG. LNG has actually broken above this. Yeah, listen, it's clear that it remains in an uptrend. Latest push higher was also not diverging, which is a good sign. Would I be following up here? Not really. You can see this is, so amazingly extended, right? it's in desperate need of a deeper pullback. I mean, I can't, in good faith, you see that the same thing applies to the channel, right? We overshot the channel as well. I think that gravity should sooner rather than later take hold of it and help it somewhat mean revert. So to be honest, I wouldn't, as I said the previous time we checked it, I wouldn't really touch this until we, show a proper corrective move lower to buy at better levels. You already say that you're in from 85. Sorry.
Bless you.
Thank you. You're in from 85. Okay, so you bought the breakout from here. Okay, bold. I would definitely protect this trade. I mean, at least put, my profit at stop loss. I'm not very aggressive with my limit orders. I would just be in this case because, as I said, we've been in an extremely strong up move. We've overshot this long-term channel. We've overshot the recent steep ascending wedge. I think at some point we're going to see some mean reversion effort, and it might be, usually these type of formations create very violent counter trend moves. So it might have taken us, just to give you an idea of what I mean, it might have taken us 27 trading days to go from like 75, which is support resistance area, to like 90. But I wouldn't be surprised if it takes us 10 trading days to find ourselves back to 75. So keep that in mind. Okay. You wrote that you longed USD ZAR. Listen, having to do with USD ZAR, the South African rand, where is it? Here it is. There we go. So, I had this trend line drawn here. We broke down from it. Before I can consider this, before I can start examining a counter trend scenario, which is the last thing I want to do, I would wait and see, because for the time being, as you see, this trend line support is now acting as resistance, right, at the retest. So I find it rather dangerous to be long as long as this trend line support, now turned resistance, is holding. Yeah, that's all I have to say about it. So, until evidence says otherwise, we've seen a very strong bearish move from above 19 to below 13 and a half, right? And yes, at some point we're going to see a counter move to the one we've seen. But, what makes you think it's going to be, today or tomorrow? I mean, technically speaking, this pair has done nothing wrong having to do with maintaining the downtrend. So keep that in mind. I would be very cautious here. I think you're jumping the gun. Now, having said that, it doesn't mean that it can't work. It means that statistically the chances are against you. But it can work. At some point, we're going to have a reversal. I just don't see conclusive evidence that this is the point in time. Now we break through that trend line. Something will have started happening in the direction of seeing a short-term reversal. Okay. ZM, let's see. ZM. Yeah, as I said the other day, looks like it is probably breaking out, right? For more confidence, I would say, give it a little bit of a leeway, a daily close above 350. Yeah, that's it. But there is a very good chance that there is a very high chance that this move lower is corrective, a very, very high chance. and there is a very decent chance that we found the low there, right? Technically speaking. So yeah, I mean, daily close above 350, and I think that buying it makes sense. Anything else, guys, girls? Okay. So, Stel,
Thank you, Steve.
thanks.
Thank you, everybody.
Bye-bye.
We'll see you later.
Bye.